Yeah, I think it was in August, Scott. Thanks for having me. And the market was in the midst of the summer rally, and it's given that back, and we keep seeing sort of this whipsaw between 3,600 and higher. And so market's trying to figure it out. Again, our hedged accounts were probably neutral, plus or minus. You know, we're pretty much fully hedged, as we have been all year. But rates are higher. And one of the things we'll talk about today, not specifically, but broadly, is that there's just a lot of business models that, you know, we're struggling at 2 and 3% that really don't work at 5 and 6%. And that's where I would tell people to you know, watch their risk.
That's a principal thing I wanted to ask you, that the higher rates go, increases your appetite for shorts?
Certain shorts. I mean, so again, business models that were dependent on easy credit and low cost credit, commercial real estate, a variety of different things. Carson Block was talking about some of the solar stocks. I mean, some of these businesses just don't work at 5 and 6 and 7% corporate rates. And there are a lot of them because the corporate world got used to that for 13 years. As for the run-of-the-mill industrial or whatever, I think, you know, that'll depend on the economy. But where we can find business models that basically are broken at mid to high single-digit interest rates, I would tell your viewers to be cautious.
You've mentioned specific names with us in the past. I'll ask you about a few of them. You say what you can say. Coinbase, still short?
We're still short. I mean, Coinbase to us is really symptomatic of the sort of broader, what I call predatory junkyard that is crypto. And so one of the things we pointed out to people is that Coinbase is losing money at a prodigious rate right now. It's charging consumers really excessive commissions, we think, retail consumers, about 2.5 to 2.6% a round trip, and every time you trade. So you do 4 trades a year, that's 10%. That's a big hit. But what's really interesting to us is that Coinbase has about 10% of the crypto universe under its umbrella. And its overhead is running about $1.5 billion a quarter. So that's $6 billion annually with 10% of the crypto universe. So if you kind of do the math, and if they're representative of sort of the broad crypto infrastructure, that means that the crypto universe is probably running expenses of $50 to $60 billion a year on a 1 trillion notional. And you guys know what that means. That's really, really high. And so we worry about, we don't know where crypto's going, we don't know where Bitcoin's going, we have no idea. But this is a really high cost industry that needs lots of activity and really high commission rates to make money. And I think that's, if you're losing money now doing that, charging retail customers 2.5% a round trip, it's not a good business model.